Hello, everybody. This is Anthony for Investors Underground. Today, I have the opportunity to speak with Mr. Anand Sanghvi, more commonly known as Sang Lucci. He first started trading equities and options in 2006, and in 2012, he opened his first hedge fund. He trades on a relatively large scale, with documented monthly profits sometimes north of $1 million. And despite all of his success, Sang Lucci remains one of the most honest, humble, and open traders, particularly on the subject of trading psychology and sharing his trading journey, which he'll be the first to tell you hasn't always been paved with big profits or even good times. You could follow him on Twitter at Sang Lucci. Hello, Sang Lucci. Thank you for being here and taking the time to speak with me today.
No problem. Glad we could get it in the books, man. Thanks for inviting me.
Absolutely. There's so much that I want to ask you, spanning options to trading psychology to life away from the desk and everything you're doing in Puerto Rico. But I would love to be able to just start closer to the beginning of your trading journey. So, can you tell us a bit about how you first got interested in finance, the stock market, and trading?
Yeah, yeah. To be quite honest, I mean, I took an investments class, I think, in college. I was studying at UMass, and that was like the first time I had any experience with investing, so to speak. And they had us doing these mock portfolios and things like that. And then, of course, it skipped my mind, and life happened, and had to go find a job. I had my daughter pretty early while I was still in college, so that got things a little bit scary. So I wanted to make sure, of course, I had some good money coming in, and I found some stability kind of thing. But ironically, once I found that stability, I hated it pretty pretty quickly. I was always kind of the guy who's had other projects going on, and had just a lot of other things going on. So I think I got to the point where I had to leave that place of stability, in search of um, sort of greener pastures and everything. It wasn't enough for me. And that's when I started searching for jobs and things like that. And I came across this one job listing of an equities trader, 100% commission. And it was this place in New Hampshire, this random office in New Hampshire. And I show up there, and it's just 25 dudes sitting in front of the computers, just hitting buttons or whatever. And I remember walking in like, what the hell is going on here? One of the kids in the office, one of the guys, I mean, he was probably like 26, maybe 27 at the time. One of the guys in the office, he probably made like 15 grand that day, and he bought everybody pizza. And I was like, wow, might as well give this a shot, kind of thing. And, it just became a thing for me. I was able to see the dollars there. And then I was able to kind of look at my life and be like, okay, if I can acquire some of these dollars, what can my life become like? And that's when I really started to actually pay attention, and give it a shot, kind of thing.
In terms of motivation for you, it
Mm.
seems like it was a combination of an interest in being able to make enough money to support yourself and, like you mentioned, your new daughter, and then was it
Yeah.
maybe something new for you as well?
Yeah, definitely. I mean, prior to that, the secondary markets were always very familiar to me, because I was a reseller since I was a kid. And secondary markets I was always familiar with. And when I was growing up, the secondary markets weren't very mature at all. I mean, you had eBay, you had Craigslist, you had stuff where there wasn't an actual market for it. You just kind of had an instant message kind of communication system, where you would find some potential buyers for what you had, and then it became a negotiation process and all that kind of stuff. So I was always familiar with that market. So stock market to me was just another kind of auction system, right? It was like, I'm only going to pay for what I want to pay for this, and then I want to sell it in X, Y, and Z. And I'm betting on price going up or down because of X, Y, and Z. So let's say I was selling. My primary secondary market game was tickets. It was selling concert tickets. It was selling sports tickets. So Red Sox has just won the pennant in 2003. and you could buy bleacher tickets for $12 and sell them for $90 as long as you found the market for it. And the market was all on eBay, and StubHub had like just started, but nobody really knew about it, so nobody was really on it. So eBay was one of the largest platforms to resell anything, and you know, if you knew the reason why there would be some higher demand for something, to me, it was just supply and demand. It was just, okay, I need to compute supply and demand for this particular market. It's obviously tougher. It's obviously tougher to read the stock market than it is to read demand on Red Sox tickets. you know. However, the concept is, ironically enough, it's pretty similar. It's pretty similar. And if you break it down to the simple, bottom level kind of thing.
That's really interesting. You sometimes will hear people maybe started with gambling or poker or something like that.
Sure.
How I
Sure.
mean that's a similar concept, but your
Sure.
experience is also quite fascinating because you sort of have this system of buy it low, sell it higher, and even like you had mentioned tickets,
Yep.
you still sort of have this notion of bots or algorithms participating like you do in the market as well, right?
Absolutely, absolutely. Now the bots and all that stuff wasn't really prevalent as much. However, we had a programmer design a bot to allow us to purchase a larger quantity of tickets from Ticketmaster, and that was back in 2004, 2003, 2004. So the automated capability of running a bot to and giving it sort of parameters to go through, that was already happening back then. That was already happening back then. And by the way, the poker craze was when I was in college. So every single one of my buddies was like running 4 different party poker chats or party poker games. And then some of the bigger ones were already into running bots for having 20 games. And they were already purchasing virtual machines through like VMware and things like that, so that they could take their one PC and have 20 different machines on one PC to run, I don't know, 40 party pokers, and then just kind of keep it going. But it was only good for a matter of time, and then as the market became smarter, people started to play poker better and blah blah blah. A lot of the edge just sort of disappeared, and that can be said about the market as well. We have those periods in time where certain algos work or certain strategies work for a certain period in time, and then
Yep.
you don't hear from them anymore, or they have to up their code, or they got to do something, you know. And so the same cycles kind of happen. So I don't know. Again, like people make these things a lot more complicated than they really are. And again, the stock market, if you really look at all of it behind everything, all going all the way to high frequency trading and dark pools and the structure of the markets, who's really involved, like who's sitting on your tape, and all that kind of. If you look at all that stuff, yeah, it sounds complicated, but they're playing the same game you are.
Absolutely. The concepts are applicable to things beyond just stock. I mean, anybody who's maybe trying to buy something on sale, whether it's a television or concert tickets, they're sort of participating in the same sort of system,
Yeah,
psychology as well. Seeing something on sale, maybe wanting to buy it, having
absolutely.
something that maybe isn't sold anymore and
Yeah.
wanting to sell that.
And I think one thing I want to throw out there just to clarify is that edge, like that concept of edge in the markets or in any market, even if you're an Amazon reseller or you're a, you got stores on Shopify or whatever the hell it is, like your edge, most people's edge in the stock market now is behavior and psychology, believe it or not, because you don't have edge like some of these other guys who are taking advantage of the structure of the market. So for example, if they see large orders coming in, they're able to front run with very quick systems, and they can scalp for pennies, and they got relationships with dark pools, and they got all kinds of stuff that the regular person, the retail schmuck at Robinhood, has got nothing. What is your edge? What's the retail trader's edge? And in reality, if you look at yourself amongst a pool of retail traders, it's either you got a control of your psychology or you don't. And it doesn't matter what strategy you have, because they all technically work. You can make them work. But if your psychology and your control over your mind is not as good as the next guy, your P&L will show as such. And if you have more of that control, that's your edge.
That's fascinating, and I absolutely want to talk uh, about trading psychology with you. Um, if we could rewind for a second,
Sure,
so
sure.
you're an equities trader. You're just getting started. You're seeing, you're in New Hampshire. You're seeing the potential
Yep.
of the money there, and it's starting to, you're starting to understand the possibilities. Let's say, what in those early days, what type of resources were available to you? What training did you
Yeah.
have? How did you learn at that time?
There was none. There was none. I mean, a couple of the head traders would sit down and kind of do classes and things like that. They would teach you how to kind of look at tape, but you got to remember, proprietary trading firm before 2007. Now, 2007 was a big rollout of this rule called Regulation NMS, and if anybody doesn't know it, I would advise you to take a look at it. And it's basically the foundation of all the changes in market structure that have brought us to this point. It also fueled the push towards algorithmic trading, computer trading, and high frequency trading. So it completely changed the market. Now, before 2007, every single proprietary trading firm had an edge. They had a technological edge, and one of the biggest ones was being able to short outside of the uptick rule, right? So there was an uptick rule in place before 2007 that they got rid of. And this uptick rule meant that you had to short. If you wanted to short, you had to short on the uptick. So if Apple right now, let's say it's trading, I don't know, 161.30.
Mhm.
And let's say the last print was 161.30. You had to put your short at 161.31 and wait for somebody to buy you out. So if you wanted to short size, if somebody wanted to go out there and short size, they had to sit out there on the offer and wait for somebody to get picked off. Now think about this, right? If your filter, we had all the proprietary trading firms had all their filters out for big size on the offer, because all we knew was it was either a big seller who just wanted to get out of shares, or it was a short that hasn't gotten filled yet. And if it was a short on an illiquid name, and I'm the only person that has the bypass for the uptick rule, what can I do? And you can't. I can beat the stock down by myself or with an office full of goons, right? I got an office full of 40 goons who have the same product as I do. So all I have to do is beat the crap out of the bid on that stock, because I can, because they called it different things. Some firms called it the product, some firms called it whatever.
Mhm.
But basically it allowed you to borrow stock and sell it on the bid, right? Where other people just wouldn't be able to do that. It's kind of similar to the locate game right now, and that's kind of the trajectory that game went. And there's a whole structure and conversation to that game and where that game is. But basically, we were able to beat a stock down, let's say a point, and then cover right into the short. Right? So imagine the whole office has probably got like 10,000 shares short, and all we're doing is trying to scalp it for 20 cents or 30 cents. Everybody's got their fill, and then we step the short down, right? Because the short is already coded to go a penny over.
Yeah.
So let's say the bid was 161.20, 161.10, 161. We would crush all of it,
Yep.
and the short would step down to the penny, to the whatever the penny was, and then we'd all cover into the short. And then that's how you just manufactured 20 cents or 30 cents in profit on however many shares. And then you just do that every day. You do that every day, and that was their edge. So all their trades were like 95% short. And then 2007 happened, and nobody in that office existed, man. I was the only one left over out of that office that kept trading. Everybody else was just like, we got no game here.
There's a number of things there. I mean, tools that the retail trader doesn't have, that
100%.
that larger players absolutely have, in coordinated sort of moves in the markets. Also, it kind of sounds a little bit like the SSR rule, but just perpetual.
Absolutely. Yeah. Same thing. Yeah, 100%. 100%.
Yeah.
Similar things kind of existed, re-existed, got re-examined, and,
Wow.
you know,
Wow.
so yeah.
And so what was sort of your A+ plus setup for stocks? I know stocks isn't primarily what you're known for these days, but like, what
I
was
mean, yeah,
your setup?
A plus always in my life since probably like 2009, since I went out on my own, was just find where the trap is, find where the
Mm,
retail trap is,
mm,
find where it looks like find where everybody is burying their long positions and going short, and they get trapped there,
mm,
or find where everybody is short and and the opposite sort of thing happens. Those places are difficult to find, but they happen.
mm,
They happen every couple of weeks,
yeah.
every couple of months on every single name,
Mm,
and those are very it's very emotionally driven.
mm,
And when you can sort of put a value to emotions and how extreme it gets, it always happens at the most extreme points where the most people are trapped and they have to move.
mm,
Either they have to sell their stock or they have to buy them back or whatever the case is. All of a sudden, it opens up to a very one-sided tape. So
mm,
what that means is everybody's trapped. Now, once that trap is set, the next few days become very one-sided. Market
mm,
makers are in on the game. Everybody has to cover from, or everybody has to buy back or whatever from their original trap, whatever it was,
mm,
and everybody's on the same side of the tape now. And then
mm,
it becomes just explosive.
mm,
But that trap is painful, is max pain for a lot of people. It
mm.
has to be. It
Yep.
has to be. If it's not, you don't have enough, you don't have as much umph on your move, kind of thing. You know what I mean? And that's
Yep.
something I saw since 2008, 2009. And
Yep.
honestly,
Yeah.
if I was really a smart trader, I would have traded nothing else but that setup. But you know what I mean? And I'd be significantly richer than I am now. However, as any human trader would know, there's a lot more emotions to this. There's over trading. There's all kinds of dumb stuff we do. That kind of holds you back from what you know to be some of your best, to be the only reasons that you need to trade. But unfortunately, it is what it is.
Yeah, absolutely. And I know I've heard Nate say that as well, which is find out what your edge is and what works for you, and just
Yep.
keep doing it.
And
And
just keep doing it.
it
And
makes
but
a
you gotta
lot of
the
sense.
the the other side to that is you gotta let the rest of that shit go, man. If you don't let the rest of it go, the rest of it can consume you. It can consume you into this emotion-filled pit of just overthinking and nonsense. And it takes you away from what you know to work and what you know has always worked for you.
I think that's extremely helpful to people listening out there on a number of levels.
Definitely.
So so now you're more known as an options trader. I think that's how a lot of people know what you do now. When did you first start trading options, and what was that process like? How'd you learn to trade options? Did you have
Yeah.
immediate success?
It
And
was tough, man. It was tough. There was a story. There was one kid at the office that I was at. We called him the flux capacitor, man. So shout out to anybody who's watched Back to the Future. We call him the flux capacitor. The kid knew everything, right? I mean, we would be like, "Yo, Flux, give me the earnings on X, Y, and Z," and he'd have it for you. You know what I mean? So we would always shoot stuff over to this kid, and he would always kind of send me ideas of other things. I'd never really pay attention. You know what I mean? He was one of those kids that knew all this stuff, but he couldn't execute. He couldn't actually trade, but he was just a great research guy. And we know plenty of these people, right? And it doesn't make them bad or better people at all. It just makes them good at whatever the hell there is that they're good at. Some traders are specifically traders because they can execute. They can execute under fear. They can execute under a lot of other circumstances that other people can't. They can't research at all. They don't give a shit about research. You know what I mean? So everybody has their part to play. So he would always send me like options ideas. So whatever. I figured, screw it. I'll take a flyer on Cheesecake Factory earnings or something like that. I bought a 10 lot or 20 lot or something like that. And then overnight, like I doubled because the stock moved in my favor. I think I doubled or tripled on it. And I was like, whoa. How do I do this with 250 grand, man? You know what I mean? So, again, like I was young at that time, I wanted these sort of big gains. So the potential for big gains kind of brought me to the options world. However, the process of understanding options is way more complicated I mean, I don't want to say too complicated that you can't figure it out. It's a learning curve that you're not prepared for, especially if you're going into it thinking you're going to make all this money, you know. So the learning curve for options is very peculiar because you could be great at trading stock and you could be great on picking direction and you could be great on all that kind of stuff. That doesn't mean you're going to translate to dollars when you trade the options. A lot of guys are great at picking direction and all that kind of stuff, but they can't make a dime in options because the timing, you got to deal with timing, you got to deal with implied volatility, you got to understand why an option is priced the way it is. Most people have no clue. They just they look at something and say, okay, this Tesla put is trading $3, but they have no idea why. And they have no idea what are the influences here. You know what I mean? What's going to make them pay? What's going to make people pay double for it? What's going to make people pay less than half for it? You know what I mean? So when people have an idea, it's easier to execute in stock because you got more kind of cushion. You got more you know, you can kind of feel around a stock way better than you can an option. You try to feel around in an option, you'd be down 50% or 40%, but that's normal. You know what I mean? That's completely normal. Depends on your expiration. You got to deal with all this kind of other stuff. And it took me a while to figure all that stuff out. It took me a while. It took me a lot of losses to figure that out. So I would be trading SPY with like considerable amounts of money. And I was just back and forth, up and down, like 30 grand, 50 grand every single day. I was like, what is going on here? Then you start to learn how to cut down on trades. You start to learn how to single out things. You start to learn, like, okay, why, you know, you want to come in when the options, when nobody wants the option, theoretically. And you want to come in when and again, behavior and psychology play a huge role in why an option is priced the way it is. People don't look at it that way, but you got to look at it as everybody who is trading that option, including the market maker, is constantly deciding where it should be priced. So if you're good at reading tape, and this is how I started to become just a monster in tape, if you're good at reading tape, I can tell immediately if I can get that option for cheaper or I need to get in now because this thing's about to run away. You know what I mean? I can tell these things being a good tape reader. And again, that's how I started the game. So then I realized the connection of the two could yield some really explosive gains. So that's how I started. It probably took me close to a year, man, to just figure it out.
Wow. Yeah.
Yeah.
And what would you say is a way that people can maybe expedite the learning curve of options, if there's even a way to do it?
I would take my master course. I really would. You know, it's a shameless plug, really, but I put it together for a reason. So I'll teach you tape. I'll teach you like the human element of options. Forget Black Scholes. Forget all this mathematical jargon. Forget all that stuff. Just look at it from a behavioral perspective and an emotional perspective, and learn to ask yourself the right questions. So these are the things that I'll teach my guys. So once they're done with the course, they'll easily be able to look at a name, look at an option chain, and be like, all right, I'm going for this expiration, I'm going for this, and this. But if my tape doesn't show me X, Y, and Z, I know I'm going to get this thing for cheaper anyway. So I'm going to wait for a 50% discount, and then I'll get in. You know, so they'll be able to do things like that. So that's what I would say is.
Great. And can you talk a bit about the importance of reading tape and even order flow in your strategy?
Yeah, it's everything. To me, it's everything. And you take it back to tickets, man. You take it back to tickets. You take it back to every secondary market. What do you have to do before engaging into a secondary market, right? And we look at the biggest secondary market right now, which is Amazon, right? So Amazon, for a reselling game, I mean, shit, here in Puerto Rico alone, some of the top 50 Amazon sellers are here on the island simply because you can benefit off the taxes. So of course, they're coming here. And if you talk to any of these guys, there's a significant amount of research and there's a significant amount of input they need to figure out before they get into a particular market. Let's say one is, selling vending machines or treadmills or whatever the hell it is. These guys are constantly looking at the metrics that Amazon will put out, or they'll create their own databases for this stuff to figure out where the sales are going on these particular products. How can they get them for cheaper, and all that kind of stuff. So the same thing in tickets. All I'm looking at is demand. How do I find the demand? Look at the history of some past concerts. Look at the record sales numbers of a particular artist. Look at sporting events. If some tennis player is going crazy, or some basketball team is winning everything, or something like that, something that spurs demand. So, and then you convert it to the equity markets. You might see a piece of news here and there, but then the most important thing is to look at the reaction, to look at the tape, look at the transactions. If I can feel the whole world buying freaking Peloton because I don't know, maybe there's some buyout hopeful, down the road, but I can see hundreds of thousands of orders coming in and people not even caring about price. And then when you're talking about flow here as well, like people putting, millions of dollars to work on a bet, you know what I mean? That may or may not happen, but they're putting significant amount of capital to work. I can't just not look at that. We can't just not look at that. All of that is demand. All of that is supply. All of that is something that's going to affect price that I might be able to make some money off of, you know? So it's everything. Without tape, I got nothing.
Yeah. And what role does intuition in reading the tape, or just in general, like with the flow of a stock, what's the
Yeah.
role of intuition? Does it play a role for you, or do you think intuition is just sort of something that people should disregard?
It's a great question. It really is a great question because now we could get into the actual definition of intuition. What is it actually, right? Because you want to make sure you answer this. You want to make sure you're using the word correctly as well as answering this properly. So, from my perspective of the word and how I use it, if you need to, number one, you need to train your intuition to know what to do. And in order to train your intuition, and I'll use some tennis examples or whatever because tennis is my world. It's like you can learn technique of tennis all day, where to put your feet and all this kind of stuff. But if you don't hit, you need to hit 1,000 balls a day, or you need to hit 500 balls a day, or something like that, in order to train your body, your mind, and everything. And that becomes your intuition now. Now your intuition is like, all right, I got the tools, I have the experience to go with the tools. Because if you just have the tools, you ain't got the experience. Your intuition is not ready. It's not ready to go, and it still can't be trusted 100%. It'll still get you in situations where pretty ugly situations. So the question I think you're asking more is that, well, how do you get your intuition to that point where you can trust it? And then once your intuition is there, how much is that a factor, right? So in order to train your intuition, shit, man, you got to go through reps. You got to go through reps. You got to make trades. You have to make trades, and you have to learn and feel what it's like to make those decisions within fractions of seconds, and then live with the consequences. And then, as a result, not beat yourself up over the results of said consequences. Look at them, continue to fine tune your instinct until you get to the point where, all right, your instinct has proven itself, which of course will be proven through gains, and then your instinct should know what to do, and boom, you're kind of ready to go. So I think those are the two parts of the equation for me. So my intuition plays a huge part. Most of the time, most of the time my intuition tells me, don't make a trade.
Hmm.
Most of the time, my intuition is like, nah, 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 nah. Now the question is do you listen to it or not? Now most people who even have a trained intuition, they still don't listen to it, man, which is the sad part of human beings and human existence. But at the same time, we've accomplished so much as human beings. You know what I mean? So who's to say what's bad or what's good and all that kind of stuff. So we can get into all these spiritual questions as well, man. I'll go everywhere if you let me.
That's amazing. I think it's extremely smart and wise to think about intuition in these ways, rather than just thinking that intuition is this one alone sort of, you have it or you don't, binary. It's more
Yeah.
of a spectrum, and something that takes time, to the degree that we're sort of bordering on the subconscious, and sort of like
Yeah.
muscle memory for, like you said, like for a tennis player. very much traders can build their intuition. It sounds like you're saying, is that accurate?
Yes, absolutely, absolutely. I 100% believe that. I mean, if we were to really go to the sort of spiritual conversations and human beings and all that kind of stuff, we do have this sort of built-in instinct. We definitely have this built-in programming that knows a good amount more than what we think it knows, right? We don't have a way to listen to it, or we don't have a way to truly access it per se. Sometimes in certain moments we're able to access it. Other times we just can't see past our overthinking or whatever the hell it is that our emotions. We can't see past all of it. So you know, I'm quite, these days I'll sit there. Most of the books that I read are all about stuff like this, decision making, and how we think, our history, what makes us who we are, instinct, and all that kind of stuff. But you also have to make your own narrative too. You also have to create what works for you. You know what I mean? And absolutely, intuition can be built upon, 100%,
I
hundred
think
percent.
I think that's extremely helpful.
100%. If you don't think like that, then you're going to have a lot of habits that you're going to feel like you can't break through, and you're going to assume that this is who you are and there's nothing you can do about it. And while many situations that may be true, there's many situations where it ain't true. It ain't true, and you can do something about it. And if you don't, that you're going to continue to feel whatever pain it is that you might be feeling, whether it might be trading losses or whatever the hell it might be. So that's it. I think it's important to realize, like, you can build that instinct. You can work on it.
And I also think it's very helpful that you had said that sometimes your intuition tells you to stay out of a trade.
Oh yeah.
I think that
Oh yeah.
might be polar opposite of what some of the newer traders feel, which
100%.
might
But
tend to lead to over
what you're
trading.
talking about is a false intuition. What you're talking about, that's not intuition. That's your emotion. That's your whatever it is that you want to put food on the table right now. Blah blah blah. That's not intuition. That's just the itch of the game kind of thing.
The psychology of it, which,
Yeah.
yeah. And before we get into psychology, I wanted to ask a couple more questions about
Sure.
options and how you trade options. So, like, for your options, how far out of the money do you
Hmm.
tend to look for?
Hmm.
And what type of, are you mostly trading like single leg contracts, or
Yeah.
do you also take part in some of the more like multi-tier stuff, whether it's the weeklies or beyond?
Yeah, I've evolved, man. I've evolved since I first started trading options. And believe it or not, the options market has evolved as well, considerably. Because now you got weeklies, now you got daily SPX options, now you got options on Bitcoin and Ethereum and tons of other crypto names. You got derivatives upon derivatives upon derivatives now that exist that you can that somebody will even just make for you if you're big enough to ask for it. So to answer your question, depends, man. It depends. So if I'm trading a weekly, generally speaking, I'll stay closer to the money, especially if it's a Friday or a Thursday and I'm looking real close to an expiration. But the only times I'm trading weekly is if I know a move will happen right now. If it ain't happening right now, chances are your option is going to go to shit with you, and you're just going to be sitting there finding excuses to stay in it while it goes to zero with you. And unfortunately, this is most traders and their experience with options. As far as the out of money stuff that I want to hold, I'll go far out. So, for example, even right now, I got GameStop $20 puts. I think it's trading at 32 or something right now, but I'm out a couple of months at the $20 strike. So I'll play stuff pretty far out if I feel like I can get some aggressive move in that sort of direction, and I can get a good price on that option. So I want to be able to come in. I want to be able to watch, a lot of the far out of the money stuff and far out in time stuff to see if I can get a good value on some of the ideas that I might have, whether it might be going up or down. Now, as far as complexity of the options, yeah, I'm doing vertical spreads. I'm selling a lot of options. Um, I've gone to a lot of other teachers as well who have helped me take a long-term options position and then sell options around it so that I can collect more premium to cut the price of my long leg down, and there's a lot of tricky things and cool things that you can do to cut your risk down in options. But at the same time, for those who aren't that experienced, concepts like hedging and things like that will get them pretty confused, because they're not you're not ready to look at it from a mindset of having multiple different, sort of strategies going on at once, and it's very difficult to sort of manage. So a lot of newer traders who start trading complex option spreads and try to hedge and do a lot of other stuff, they'll get confused and then add to the losses, because you get smoked on your idea, and you get smoked on the hedge, so there's a learning curve to that as well, and I had to go through it too.
One of the things that you said was that I think is really interesting is that you alluded to going to others to continue to learn.
Oh yeah, oh yeah, oh yeah, hell yeah, man. You got to realize too, you ain't nothing at the end of the day, man. Even if you made 5 mil, 10 mil, whatever the hell it is, you ain't nothing. At the end of the day, you ain't nothing. You always have, and the market will always show you something that you ain't never seen before. And when it happens, and if you're not humble enough to look at it that way, it doesn't matter what amount of money you make. Your day is numbered right then and there. Right then and there, it could be gone in a second, man. It's that quick, and you see it every day. We see it every day. Billions of dollars evaporate into, ideas that nobody thought could go bankrupt, or whatever it is, and it happens every day, man. So it doesn't matter, you making the money has nothing to do with it, and it's everything is about your continued evolution. Because if the one time you decide that that's it, you're there, you have everything down pat, market comes in there and tells you, nah, man, you don't run me.
Yeah, that's incredibly powerful to hear. And there's the old saying about either you adapt or
Or you
essentially
die.
die. You'll be
Or you
gone from the
die.
market. Yeah.
100%. Yep.
And sort of on that note of adapting and the market evolving, for options, what have you seen in terms of a difference, from the options market in 2020 with COVID compared
Mhm.
to 2022 with the Fed and some of the uncertainty around
Yeah,
rate hikes?
yeah, yeah. What's happening right now? And again, I'm the first one to say, I've never seen this before. I've never seen a market trade like this from the options perspective. Previously, from 2020 or before, like I would be able to hold an option, for a decent period in time and try to really get a read on it. Right now, it's a lot of program and algo trading. It's the most that I've ever seen in my entire life, man. And you'll have runaway algos, buy programs and sell programs that are hitting thousands of names, and it'll happen just like this. And they could come from a random news bomb or tape bomb from wherever the hell about CPI, about some Fed speaker talking here and there. We're in a really tough period right now, I think, for trading in general, for most strategies out there. And you could throw them all up there and just look at them and examine all of them and their history. Like, we're at a very difficult time for most traders, especially traders who have been in the game for a while. So for me, on the options perspective, especially now that they have dailies, and by the way, you can now trade SPX options overnight. So they'll open up SPX options overnight. This is the first time options ever have been open overnight. Now, when all this happens, the larger players who have to make the market for these options and sit there and they got a ton of inventory or whatever, like, they're moving things. They have to move things. They have to come to the stock, buy or sell it. They got to go to different options, buy them or sell them. And so shit's moving. And because of the advent of all these new products, the market's going to change how it moves as well. Different times that things happen, different execution algorithms that happen randomly, and obviously those affect your option price as well. So holding on to options right now is a difficult game to play unless your timing is freaking spot on. And usually it happens off the backs of what? Again, back to my 2009 realization. It happens off the backs of traps. Some of the biggest traps that you'll see. Look at the other day too, when markets rallied considerably, and then all of a sudden Powell started speaking, and boom, we had one day where we gave back gains of weeks. So this happens quite a lot now. You get stuck in that trap, and they'll make it look so good that you get stuck in that trap. But they've been doing that for a while. It's different, but it ain't. The core concept is still there, but the way that they get there is different, man. I swear to God, they have ways to look at our emotions and look at our behavior, and they look at ways to analyze, like peak retail fear, panic, greed, all this kind of stuff, man. And they're able to push these buttons like that. I can't prove it, of course, but it's very ironic where the largest money gets made in the markets. It's always off the backs of somebody else. You know what I mean? Off the backs of everybody else being positioned on the wrong side of things. You know? So it's if you have to continually say that's ironic, it ain't ironic anymore. It's a program. Somebody's making this happen. You know what I mean? And again, you don't have to be as traders. We don't have to be that good that we're making these things happen. We don't have to be. All we have to do is see it coming and take our piece and get the hell out. But it's obviously easier said than done.
Right. Yeah, absolutely. Yeah, last week, just to sort of put a fine point on your example, last week we saw lots of buying, and then just on Friday, the market basically had a meltdown and
Yeah,
gave back basically everything from
everything.
everything that it had built up that week, and to a certain degree,
Yep.
beyond that, and confidence and things like that as well. One of the questions I had for you was, do you think it could be beneficial to build a skill set and understand the world of options for just the pure stock equities trader in order to build some edge? Do you think it could be helpful for them not to
I
necessarily trade options, but to just get a better understanding of how they trade?
absolutely. Ask Nate this question. You know what I mean? Like, once you're able to look at the market from an options perspective as well, you'll start to realize like much different strategies that you can use that you're already kind of looking at and doing in the equities. You just need to transfer those skills. It's like, again, like sports. If you're good at one sport, a lot of skills are very transferable. You know what I mean? To another sport. So if you're a sports player with a very high IQ for sports, like you could look at a Michael Jordan. Of course, Michael Jordan is a friggin' is an anomaly, but there's many players that are like him that aren't as world renowned, so to speak. But if you can play one sport, it translates very well to another. So don't for at all think that you can't trade options, or it shouldn't be worth it. Now, there is something to be said about, you got a good thing going and you don't want to mess that up and blah blah blah. Fine, you can make that case all day, and that's a personal decision. You're allowed to make whatever personal freaking decisions you want, because it's your life, it's your money. Who the hell cares except for you? You know what I mean? However, the skills are transferable. There's a lot of things that you can pick up that you're reading in the equities market, especially for the small cap guys. When you look at the options market, you will start to see a lot of things that will push the moves in the equities markets too, and a lot of stuff like that. When they open up strikes, when they don't open up strikes for a particular small cap name, because it's never traded up there ever. So options are going to be the last to figure, to last to get affected, so to speak. And they'll start opening up different strike prices. But if there's no strikes open up, and you wonder why we got to that last strike that's opening up on the options chain, it's not a wonder here. A lot of the liquidity issues, a lot of the liquidity that's going on and everything, like you see it in the options. Remember, if somebody needs to hedge on if I'm in a small cap stock short and I need to hedge, there's only a couple of ways I can do it. It's not like I can sit there and trade the futures. I can't trade S&P futures to hedge my stupid short on BBBY or something like. I can't do that. The only way I can freaking hedge is to go to the options market. And if I got to go to the options market, and some of these other larger players are doing it, there's a game there. There's a game. There's information. There's information that I don't have right now, and I ain't looking at. So 100%, man. I would recommend every single equities trader to put some options in their life or just start looking at them.
Yeah, thanks. Yeah, I think that's helpful. And yeah, I've absolutely seen Nate start to take part in some of these options
Oh man,
trades.
he'll send me that shit all the time. He'll send me it all the time, and he'll just laugh. Hilarious.
Yeah, it's great to see even, elite, amazing traders continue to learn, whether that's Nate with options or you even mentioning, learning from others in terms of options. There's always this constant evolution, which is great.
Yep.
Yeah. And so moving on a little bit to psychology in trading, I wanted to ask, in your opinion and your belief, how important is psychology, that component, that mental component in trading?
Yeah, I mean, here's the thing, man. There's two sides of the coin here, man, and I'm gonna play devil's advocate because there's a growing world of traders who don't believe in psychology at all, and don't believe, but they don't. And again, it's how human beings circle around definitions, right? We'll always circle around definitions because somebody has a different definition than you do of what it means to them, right? And then you sit in an argument with these people, and then you realize at the end of the argument that you're talking about the same thing, you just word it differently. You know what I mean? So so to the point about psychology, right? When I think about the psychology of trading, I think number one, two different things, right? There's market psychology, right? And then there's my own personal sort of beliefs, behaviors, and psychology in and of itself, my own emotions and all that kind of stuff, right? So I think it's extremely important, number one, to understand market psychology. Now, the second one is up for debate, right? Because if somebody creates a system of trading that has rules for everything, right? That has rules for when to add, when to exit, when to get in, what indicators to use, how many do you want to use, how many have to be right before you take the trade, and blah, blah, blah. And you have an actual system, right? Where you have your risk defined and literally everything to the T, right? And you've done this over a period of time of years to create the data for it as well. One could say that there is no psychology to this, right? One could say that the psychology has been taken out of this equation. Now, here's where it gets messy, right? If you look at the trading stats, would you find some human error in there? Would you find mistakes? Would you find where a human being said to himself, okay, the system says add more here, or the system says exit here. Did I actually do that? And then you could look at the percentage of times that they did that and made that error. Then could you really say that psychology is not a freaking part of this? If 50% of the time you made a freaking error on your system and you didn't stick to the rules of your system, now could you really say that there is no psychology in this game? Could you really make that argument? I don't think you can. Now, if you tell me, my bad to cut you off, if you tell me that you have this system, you stick to it, maybe it's all automated, and all that kind of stuff. Okay, great. Maybe you've taken that sort of behavioral psychology and your own emotions sort of out of the equation, which is amazing. That doesn't mean you got a profitable strategy. At the same time, it's just down to the code. It's down to the code at that point, right? So I'm playing devil's advocate here, man. For me personally, I think it's one of the most. I think it's the only important thing because I I only know myself, right? And I can only speak for myself. Now, in speaking for myself, you find that you're very similar to a lot of other people. I'm a pretty emotional guy, so to speak. So what's going on in my life always has an effect on my P&L, right? How I feel has an effect on my P&L. So immediately, I'll sit there and talk about psychology all day because if I don't feel good and it makes me, hesitate, or it makes me trade with fear, or it makes me whatever, then psychology plays a distinct factor in my performance, and nobody can tell me otherwise. How to control those things is a whole nother science, right? I mean, people have written books and people pay trading coaches thousands of dollars a month to figure this shit out. So as I said before, for most retail traders, your edge is up here because you're trading the same shit as the next guy, and your ability to make money is solely based on the fact that you got more of your noodles up here, you know. So that is how I would answer that question. And again, it's 2022, man. You can't just say black and white shit anymore. You know what I mean? Shit has layers to it. Everything has layers to it.
Yeah, that's an amazing answer. I certainly appreciate the complexity and the layers that go into it, and I think you're right. There is a fair point to be made about the the whether you consider psychology something that you want to attach to a code, a piece of code, an algorithm. I think there's also a fair argument to be made about maybe that coding has actually just hard coded the psychology into it until we get to the point where AI is just coding itself, right? Where
Yes, exactly, exactly.
and maybe
Which
maybe
which
that's
we might get to that
2023.
point. Which we might get to that point, and
Yeah,
and then you could have the argument of, do we even have a market anymore?
right.
So when we go back to market psychology, man, do you think any of this exists without emotions?
Right.
Does any of this price instability exist without emotions? I don't think it's possible. I don't think it's possible at all. I don't think it's possible to see the prices on equities moving the way they are without emotions.
Right.
You know what I mean? So we'll always overreach. Maybe some valuation is, they'll say on CNBC all the time, like, this is properly valued. This stock is properly valued. We've discounted all these future cash flows. You go to the fundamental models and you start to figure out what each share price should be worth depending on earnings of whatever company, and and all that kind of stuff. And then you go ahead and say, okay, this stock is properly valued. Now every day there's emotions involved, which cause that balance to go up and down like crazy, depending on factors that we're either scared about or we feel good about, right?
Right.
So we feel good about the economy, so screw it. Go to the moon, man. Go to the moon. Everything to the moon. Who gives a shit? If we feel fearful about something, we'll take a Peloton down to negative money, man. We'll take a Peloton down to negative money, after being completely infatuated with it and buying bikes for everybody in our families.
Right.
And then we'll say, nah, man, it's completely,
Right.
it's completely gone. It's completely useless. Even though they're still selling bikes, they still got IP, they still got, whatever the hell they have. But our perception of it is, screw this thing, man. This shit's useless.
Where would you say for the human trader the importance of ego plays? So maybe you have a 6 or 7 or 8 figure trader who does well. Where's that fine line in
Oof.
ego where they have seen this type of market or seen this type of move before, and so they're steadfast in their trade, versus
Yeah.
the other side of that where it becomes harmful and they're doubling down on a
This
losing
is
position? Can you
this
maybe
is
talk
tough.
about ego in trading?
This is tough. This is tough. This is a really tough one, because especially in 2020. Remember, we're in 2022, and most people's relationships with their egos and most people's definition of ego is immediately negative. It's not a positive. It's not a positive feeling or thought immediately after somebody says, "Oh, this guy's got a lot of ego." They ain't saying it in a positive way. They're saying it in a negative way. Dude's an asshole, or he's got a problem, or something like that. You know what I mean? So when you look at it in trading, you have to realize you have to have a relationship with your ego, right? Because there's things that your ego will do for you that are incredible, absolutely incredible. To get to a 7-figure trading, to get to 8 figures, who doesn't have ego? How the hell are you not going to have some ego to get there in the first freaking place? Number one, you had to have it to believe that you could have done it, right? And there's no other way you would have gotten there without the ego to tell you that you possibly could have had it. You know what I mean? To even dream up the idea to begin with, and to even get a little bit of confidence just to figure out how to go there. You know what I mean? So it's not all negative here. Where it gets negative, where it starts to turn the tides here. And again, I'm not the psychologist, the therapist. I don't have all the terms and the science behind it. I can just speak to how it happens for me. I've been aware of my ego and what it does to me. When it starts telling you, like, when it starts making you live, uh when it when you're a different person, when that's a completely different person, and it requires different things, and the things that it requires has an effect on the other person, right? So now you got two people, right? Let's just call it schizophrenia at that point, right? You're one person who needs, basics to live, doesn't need much, But then this ego starts to talk to you and says, "Oh, we can do this, we can do that, we can do this, we can do that." And it'll go places that, and again, it's just a manifestation. It's just dreams at that point. It's just thoughts, you know. And but again, thoughts can be believed, and once we believe them and we truly internalize them, we start to feel that way. We start to believe it's true, and all of it is completely true. And then what it does is that it puts us in situations that we can't control. We can't control ourselves anymore, and that's where it turns against us. You know what I mean? And now you have to feed it. It requires maintenance. The ego now requires maintenance. It requires things. And that causes a lot of stress. Causes a lot of stress, and eventually you crack, and you can't keep that up. So you have to, number one, you have to be aware of it. You have to be aware of what it looks like for you, what it does for you, what it doesn't do for you, how it hurts you or how it hurts other people. You got to look at all this kind of stuff, if you wanted to get to that point. Most people, again, they just need it. They just need it to get them to believe, right? To get them to believe and get there. And then when you get there, you start to have other things, right? Because people always have this sort of belief, once I get there, everything's going to be fine. Like, nah, no, bro. Like, no. Once you get there, now there's another thing, and there's other problems and all this kind of stuff. Like, life continues to go on. Like, your suffering, so to speak, that you did to yourself mentally, it doesn't stop. It just changes, right? So now you got to deal with this ego that you've created that got you to this point thus far. But you got to tell this person who just happens to be another side of you, that, hey, you know what? Now it's time to chill out. We got here. We're good. We don't have to go there anymore. We don't need all that anymore. And we can chill out. You know what I mean? So there's a balance thing, just like with anything else in life. The yin and yang, man, you're constantly on that line. And it's difficult to stay on that line. You're always going to be balanced. You're always going to be on one other side of it. You know what I mean? That's the truth of it.
Yeah.
But as long as you can continue to coming back and finding that line, you should be okay. The further you get, the more problems you got.
Yeah, I think that's extremely helpful, and I kind of want to stick with this theme of staying balanced. Despite whatever your ego might be telling you and what you might be thinking up you're capable of doing, or what your worth is, for example. So, say a trader has a red month. How much do you think they should attach to that, if any? And do you think it's important to think beyond just P&L? And if so, how should traders think about their worth as a trader beyond just P&L?
This is the question right here. I mean, I feel like if you could get the platform to just focus on this question alone, from like the best traders out there and even the worst traders out there, from everybody, forget about rankings and forget about all that kind of stuff. Just ask every single trader. That would be the best. That would probably be one of the best, podcasts or something like that you could tune into, because everybody's way of finding the answer to that, that's kind of that's the answer you're more or less looking for. You know what I mean? So my answer to this, to this question is that the further you can get away from it, the happier you will be, as a trader. The happier lifestyle you will be as a trader, right? Because if you look at the other extreme of it, where you look at the person who says, okay, my net worth is my value, right? My P&L is my value. You look at that person and what they have to deal with mentally, and we've all been there as well. That's a big it's a big burden that you're walking around with all the time. And I'm not talking about like from a trading perspective. I'm just talking about in life. It will have you confused. It'll have you being a complete hypocrite out there. It will have you unable to interact and communicate with a lot of people. There'll be a lot of consequences that you have with that particular burden on your shoulders, and walking around with that burden on your shoulders in life. That will have a lot of consequences on your relationships, the way that you live, the choices that you make, the decisions you make, who you choose to be around you. You know, you There's going to be a lot of losses, and it's not in the form of P&L per se. It's in the form of other things. Maybe your family. Most importantly, your family, and some of the best relationships, some of the most important relationships that you should take care of. You know what I mean? And again, at the end of the day, a human being can make whatever choice they freaking want to. There's no right or wrong here. However, there's this sort of idea of the least amount of suffering possible. You know what I mean? And the least amount of drama and all this kind of stuff. So if you look at the extremes of it, then you can kind of start to figure out what the middle picture is, right? The person who doesn't care about it at all, they wouldn't be trading in the first fucking place, man. They wouldn't be They wouldn't be a trader anyway. If you don't look at money at all, you wouldn't even find the value of doing it, because the value of doing it goes against your beliefs and practices in the first freaking place. You know what I mean? It's not even in your code. It's not even in your body to even come up with that an example. It's like an astute vegan eating meat. You know what I mean? All of a sudden deciding to eat meat, it just wouldn't do it. It just wouldn't do it. Because it's not part of their belief system, right? So those are your extremes right there, And then somewhere in the middle, you may have a group of guys. You may or may not have a group of guys, because I haven't seen too many people who operate in the middle. I'll tell you, the people that I've met, the traders that I've met, you know where they are? They're in Puerto Rico. The ones that I have met who are right there in the middle, where they don't give a shit. They don't give a shit about it, but they understand the choice, the power, the convenience, or whatever that comes along with it, and they've developed a way of thinking where they realize, like, okay, I have my system. I know how to extract X, Y, and Z dollars. I don't care how much I have. It's just numbers at the end of the day. If I make X, Y, and Z, I can go do something extra. I can choose something else. And I'm only going to come to the market when my opportunity permits. I'm not going to force anything. I'm not going to define myself with my P&L. None of that. You know what I mean? I'm not going to act like I'm somebody who I'm not. I'm not going to do any of that stuff. So those are the people that I found in the middle. And by the way, those people are extremely successful in trading, because they trade like 2, 3, 4 times out the year. And the rest of the time, they ain't doing shit, but they're doing everything, right? You're not working per se, but you're doing all the things that make you happy. Whether it might be tons of traveling, it might be just spending time with family, it might be playing a lot of sports, it might be freaking sitting on a jet ski for 3 hours. Those are the kind of people that I'm talking about. And I've only met them here in Puerto Rico.
Do you think that it's possible for a trader to have a great P&L and be making a lot of money, but still be struggling?
100%. Of course. Of course, man. That shit happens all the day. It happens to me all the time. You know what I mean? You make decent money. Well, actually, would I say it happens to me? No, it only happens to me when I'm not making money. So to your point, to the guy who's making money but still struggling, what do you mean by struggling? Struggling with what specifically?
Whether they're struggling financially or struggling mentally. Do you think?
Oh, sure. There's a lot of examples of that. I'll give you a couple of examples of guys who have great strategies and it works and they make money, but they're absolutely miserable. Why? Because they got a past life that they're trying to pay for. They got a new life that they want to pay for and want to finance, and it's just not coming quick enough. Those people are miserable as shit, of course. Why? Because there's all this wanting and desiring and all that kind of stuff, and that is the source of all our misery. Go look at any Buddhism books or Hinduism books, it'll tell you the same shit. Right? So the source of all this sort of misery is what we want. We're not getting it right now, even though we have a good strategy. We're making some money. We don't have what we want right now. Therefore, we're struggling and we're miserable. You know what I mean? That's a sad situation. Those situations are sad, but shit, even if you're losing and you're struggling, believe it or not, and again, I'll go into a little diatribe here, but people love comparing struggle. People love comparing misery. Like, my misery is worse than yours. And a starving kid has only one thing to worry about and is miserable about. He can't eat. Obviously, it's worse than some miserable millionaire who wants more, right? At the initial sound of it, of course, there's no comparison. You're going to think of the kid, and you're going to be mad at the millionaire for even being upset. However, it's him. He can't feel the kid. He can't feel the kid. He can't feel the kid unless he was the kid. There's no way for him to internalize what the kid's feeling. The only way for him to internalize anything is his own suffering. So one could argue, and again, this is all in the Eastern philosophies, that all suffering is suffering. There's no way to compare the two. You feel your suffering the same way I do, regardless of what the situation is. But we sit there and we love to compare and contrast and say, you got it good, man. You got a bunch of money, blah, blah, blah. You don't deserve to act like that, So that's kind of how I'd answer that question. So absolutely, you'd have tons of conversations with traders who are unhappy, even though they got a good strategy, they're making some money.
Yeah. Thanks. I think that's extremely helpful to hear, and I think it's a balanced perspective on how to think about P&L and how you're doing in the market. You might still be struggling at other things.
Oh
And
yeah, I mean, I'll tell you right now, and my bad to cut you off again. Like when I compare myself to some of the traders down here in Puerto Rico, I feel like absolute shit, my friend. I feel like shit. Sometimes I don't even want to wake up the next day because it's like sometimes you're in a battle with yourself. You're like, how am I going to get there? How do I even get there? And then you just get upset about it, and you go into these sort of emotional states. And again, they're just emotions, right? So as soon as you decide to stop feeling that emotion, you can choose to feel the right emotion, which is sit your ass in front of a computer and figure this shit out. There's no other emotion. There's nothing else you could do in that equation. But the more you start comparing to other traders and where you think you should be in life and P&L and all that kind of stuff, the amount of misery that you will put on your shoulders, it's so much to the point that you will not be able to surpass it. You know what I mean? And for most people, it crushes them. It crushes them. It crushes their relationships. It crushes everything because most human beings, man, they're not tested like this. You're not tested like this. So as soon as you do, and then you fail, but then you wonder why. When you fail, you wonder why you give up so quick. I mean, it feels like that, and that's why I made that comparison of the suffering. It feels horrible when you're in it, and if you allow yourself to feel that way, it'll crush you. It'll crush you.
well, I think that's humble of you to say, but it's extremely honest, and I think that's why people love to hear from you because you do bring that honesty and talk about things that other traders, particularly successful elite traders, don't want to talk about and don't want to say. So
Sure,
thank you for
sure.
that. And you also had mentioned, traders in Puerto Rico. So I want to touch on that subject because
Cool.
I think it's extremely interesting what you're doing out in Puerto Rico. So can you maybe talk about your decision to move, from continental,
Yeah,
U.S. to Puerto Rico,
yeah.
and what that experience has been like, and what sparked, trade space.
Man, there's so many ways that I want to answer this question. I'll try to keep it as short as possible, but again, there's always a backstory to the decisions we make in our lives. You know what I mean? And I think those backstories are very important to talk about, to discuss, to celebrate, to share. Um, that fund that you talked about in the intro, that fund blew up in New York, and after the blow up of that fund in New York, I had to go back to Boston, man, with my tail between my legs, and I had to go back to ground zero again, and my ascent back, so to speak, was very slow, and I went through a period of, 2, 3 years depressed, man. I just didn't think I had it in me anymore. I didn't think I didn't even think I had a purpose, man. I was just kind of punting around every single day, sleeping a lot, eating horribly, and I just didn't think I had anything to offer, man. It was a period in my life where I didn't have I just didn't have any motivation whatsoever. And sometimes in life you need those things to come from outside events. You kind of need chaos. You kind of need these sort of wake up calls that happen in the form of something crazy or something negative or something bad, something traumatic, and things like that. So without getting too personal, there was a traumatic event that happened, and it kind of just kicked everything. It just kind of kicked my depression out. It just kind of booted it out of the picture, and I was like, "What the hell have I been thinking about for the last 2 years?" And then I just kind of snapped out of it, man. It just kind of snapped. But that's what trauma will do to you, right? It'll either impact you negatively, but most of the time, there's a positive to it. So all of a sudden, like, I started creating a game plan again. I got back into the secondary markets. I got back with some small little hustles that I could piece together some cash. I started making my monthlies back. I started talking a lot more about it. I started opening up a lot more about what was going on. Um, and then slowly but surely, it was like 6 months after I made that decision or changed my mindset, boom, I had some monthly income. I had a couple hundred grand to throw back in a trading account. And then we're talking like 2017, and I kind of just started dipping my toes back into the market again. And it was a lot of ups and downs. It was a lot of ups and downs, a lot of ups and downs. But I didn't blow up. Like, I didn't blow up. Like, I was in there. I was in there. I was mentally in there. And then my confidence came back. All of it came back. And I knew in my head that it was coming. I knew in my head that it was coming. And I knew I would never forgive myself if I allowed the blow up to happen the way that it happened again. Because I know in life, I knew there's always these ups and downs. For me, depending on how emotional you are, so to speak, or how kind of extreme you are as a person, it'll reflect in your life as well, of course, because you're going to have extremes in your life too. So for me, I wanted to make sure that my next upswing, I always accounted for the next downswing, right? So I would never be in a position where I lost everything and I had no monthly income or all that kind of stuff. So I started making the right moves, I started learning from all the mistakes that I made and been like, all right, you got to do this the right way, right? So Puerto Rico was just a great place for me to start. And obviously starting with relieving a tax burden on yourself is like it's kind of like a cheat code, man. It really is a cheat code. So I knew it was coming. I knew it was coming. And I think one month I had a 1.2, $1.3 million month, and then I was already set up here in Puerto Rico, and I started purchasing real estate, and then the next year I had a $2 million year. The next year after that I had a $2 million year. And then just things started to roll, man. And it was almost like my down period never happened, but you know it's around the corner, man. It's always around the corner, and you can never see it coming. You just got to know it's there. So for me, I made the right moves from a business sort of perspective, purchasing other assets that would always kind of retain value, would always kind of give me a cash flow asset, things like that. And without getting into too many details, now I have, even if I fuck up, who gives a shit? You know what I mean? So now I kind of I put myself in that position to give myself the freedom, the real freedom that I've always wanted. That you just kind of talk about. Everybody talks about this freedom that they want, and sure, they make the money, but they don't set their lives up as such, from a business perspective. So that's what I did, and that was Puerto Rico for me initially, and then this is probably one of the most I've never enjoyed a place as much as I enjoy this place. The people here, the community, the energy here, the beach, the everything here. It's just such a beautiful place. And trade space blossomed out of the realization that traders are so alone, man. And as I was going through all this shit, I didn't talk. I didn't talk to anybody. The only person I barely talked to at the time, especially when I was going through it all, was Nate. And then I started trading with him. And there was a year or whatever that I was just trading with him in his office. It was just me and him, and the bond that we created just from me sitting next to him. He learned so much from me. I learned so much from him, just from sitting next to each other. It wasn't like scheduled conversations. I didn't have a scheduled conversation with the man. I just learned from the energy that was in the office. And I was like, what the fuck, man? How come we're not all doing this? You know what I mean? Everybody operates and trades from their house, and from their phones or whatever, and everybody now trades. I mean, literally, you could say half the world who has internet has a brokerage account at this point. You know what I mean? And there's so much that we don't discuss with each other. We don't talk to each other. We don't spend time with each other. Meanwhile, we're the only ones who understand each other. People's spouses, they don't even understand each other. They don't tell their kids about any of this shit because it's too stressful for them or whatever it is. So you don't even have a support system. Nobody does. Barely any trader has a decent support system enough to keep you in this game. And I was just like, this is whack, man. Why don't we just go back to having some fun? And so I put up the office. I didn't know anybody would show up. And sure enough, everybody showed up.
That's amazing. I mean, again, I really appreciate your openness. I think that's really helpful for people to hear. I think it also speaks to your maturity to understand where you could be better the next time around, right?
Absolutely.
You stayed in the game. You thought about what you could be doing better, where you wouldn't do certain things, and here you are, making a place for all traders to be able to come learn from one another. And I think it's great that you and Nate are in close contact. I think you two are a great complement to one another.
I think so.
Options and equity and just personalities and everything. It's really great to hear. And it's really interesting. I think, I've heard about a lot of people and know a couple people who've moved to Puerto Rico for the very reasons that you're mentioning, the tax breaks. And so on that note, when do you think it's best for people, in what situation do you think is best for traders to consider Puerto Rico? Is it the beginning of their career? Would you say it's, when they have some success and profitability? What advice would you give for traders listening who might be considering Puerto Rico?
I think it's most applicable to the person who is able to have the mobility. It's like if you're already a trader who has a family and has a very sort of, I don't want to say set in stone per se, but you have a life already in whatever community that you are in and whatever city that you are in, whatever state. If you're already very connected to your community, you own property there, you have your family, you have your kids there, it's very difficult to uproot those kinds of situations. It's very difficult to do that. However, there is something to be said, of course, about opportunity and about how you feel as you're going through your trading sort of upswings and downswings. So I would recommend it most, for the single sort of trader who is starting to experience some good growth in their P&L. They're really starting to feel confidence in their strategy, and they know that the future is going to bring some serious numbers to their sort of equation. So Puerto Rico can be a place where you can you're doubling your income here, man. I mean, let's face it. If you're in California or anywhere in the States and you make $1 million, there's 40% straight out the window, and that's a big deal. That's a big deal. In some states, it's even worse than that. So hence why you're going to Florida and you're going to Texas and all that kind of stuff, which is great, which is great. Get down there if you can. Just from a tax perspective. But if you're looking to make real money in the market and you don't think about your taxes, that's it's a problem. It is a problem. It's something that you have to consider. So if most people think of Puerto Rico as they have the wrong sort of perception of it, and it is an amazing place. It is an amazing place. You can get great internet, great food, great people, and all that kind of stuff. So you can get everything that you have in the States. You can get it down here just fine. And you're on a Caribbean freaking island with a damn rainforest and some of the best beaches in the world. So, there's a quality of life that you're not going to have, in many other places in the world.
Yeah. Awesome.
So, yeah.
Yeah. Puerto Rico it is.
Come through. And you guys are welcome to come to Trade Space.
Absolutely. And so, Lucci, if it's okay with you, I'd love to be able to go through a lightning round of just quick questions and quick answers.
Cool. Let's do it.
Great. So the first question I have is, what were the most influential education resources in your development, whether that was books, courses, people?
But it was books and it was books and it was better traders. It was traders who had already reached sort of levels of success that I was able to talk to and just grab sort of tidbits of information from. But from a book perspective, it was all psychology books. Everything was psychology books. One of the biggest ones was Trading in the Zone by Mark Douglas. Some of the some of the market structure books like Dark Pools by like Scott Patterson and things like that. You get to learn a lot about what markets really are and what you don't know, and some of the bigger players out there, how they extract their dollars. So you have to know your craft. You have to know your craft, man. So from a trading strategy perspective, I never really fell into, because you can create a strategy out of thin air, man. You know what I mean? But to be able to execute and make decisions very quickly and live with those consequences, there's a whole nother game inside of that. It's like when people try to learn another language, right? You can sit there and learn all the rules of it, but if you don't actually go out there and speak it, you don't know the freaking language, man. You don't know the language, and you can't walk around saying you know it. You know what I mean? It's two different parts of the brain right there. You have to learn how to receive information, translate it into your language, and then output the shit back to whoever the hell you're talking to, so that they understand what you're talking about. And language and communication, we're talking about two different ways of putting it together. So again, like you could show me any strategy. I don't give a damn about a strategy. Can you execute it? Who are you as a person? Are you emotionally stable? Are you all over the place? When you get angry, do you make dumb decisions? Blah, blah, blah. All that kind of stuff plays into account. So yeah, that would be my answer there.
That's a great answer. And next question is, knowing what you know now about trading and the markets, what advice would your modern self give to you back at the start of your trading journey? And do you think you would even listen to yourself?
Nah, nah. So the second part of that question is the better question, because you wouldn't listen to yourself, because you don't know what you know. You don't know what you don't know. You
Mm.
don't know what you don't know, and you don't know what you will know in the future. You know what I mean? So anytime people ask me that question, I just kind of laugh, and I'm just like, that ain't the question that you want to ask, because if you're asking that question, you're not ready to hear the fucking answer, even if I gave it to you, man.
Mm-hmm.
You know what I mean?
Yep.
So you already had it ready anyway with the second part.
Yeah.
So I'll take the second part and go for a nix on that one.
So, what's one thing that you do that or profitable traders do, but specifically you do that a lot of struggling or failing traders you think don't do?
Oof, man, I do a lot of the things that failing traders do. You know what I mean? I still do those things, so I can't sit here holier than thou and say I don't do those things. So I think one of the most important things, though, is to be able to take a step back and stop and stop. You have to be able to stop at some point. You have to be able to stop at some point and say to yourself, like, what you're doing right now, or whatever it is that you're trying to do, is not working. And if it's not working from a personal standpoint or from a market standpoint, whatever it is, it ain't working. So you have to be able to stop. And if you can't do that, unfortunately, you're going to blow out accounts. So from that angle of it, it's all about saving yourself from yourself. So different ways to save yourself from yourself. And unfortunately, the newer traders, they're not equipped with that many tools, because number one, they haven't experienced that much up and down before. Me, I have. You know what I mean? So I can feel it coming. I know what it feels like. I know what it makes me do. You know what I mean? So it's a different equation for me. So for me, or pivot to something else for a little bit, pivot to, you could, I traded crypto for months, I didn't even look at options and equities, because I didn't know what the hell was going on. So I just went over here and traded, crypto futures for months, and I did really well, because that was the only thing that made sense, you know?
Last question. For people listening who want to learn more about your trading strategy or contact you, how can they
Yeah.
do that?
Yeah, the best way is just hit me up on the social medias at Sang Lucci. You can hit me up social media at Sang Lucci, on all the social media platforms. Of course, you can go to sanglucci.com as well. Send me an email. It'll all get directed back to me. My team is pretty good on, hitting me up with stuff like that. So, if anybody wants to get in touch, I would also get in touch with the Trade Space Instagram as well. hit us up over there if you guys are interested in coming down. I think the best way to learn, just how I said it before, was just learning from other traders. Just sit in an office like this, shut up, and just listen. It's amazing what you'll pick up in a month if you just sit here and listen. And you ain't got to pay thousands of dollars for education. You don't have to do that. It's a different kind of education, you know? So it's kind of the one that you need after you've taken all the education. Once you take one or two courses, like enough, man. I've met people who have taken course after course after course after course after course, and they're still looking for courses, man. That shit is terrible. That shit ain't gonna get you nowhere. At some point, you gotta push buttons. You gotta push buttons and you gotta get some experience. And when you start doing that and you're around other people that are doing the same thing and you're having fun with them too and you're building relationships with them too, I think right there and then you've given yourself a shot. You can give yourself a shot.
Sang Lucci, thank you so much for taking the time to speak with me today. It's been an absolute pleasure.
Thank you, man. Thank you. I love the questions, man. I love the questions.
If you liked this video, don't forget to hit the like, subscribe, and notification bell. Thanks for watching.